If you're looking for information on how to shop for a mortgage, or if you have a client who really could benefit from this information, you're in the right place. I'm here with one of Brevard's absolute top loan officers, Mary Caples. How are you doing, Mary?
I'm doing great. How are you?
Good. We're talking about shopping for a mortgage.
Nice.
Have you ever had a client that has been shopping for a mortgage?
I have.
And have you ever thought to yourselves, they're not doing this right, and they could use this information?
I have definitely thought that before, yes.
Okay, cool. So we're going to talk all about shopping for a mortgage because look, there's options out there, and we'd be crazy to think we're the only one. And our goal is just to get them the right mortgage for them, right?
Absolutely.
And so when people shop, most people think automatically when shopping for a mortgage, they think about rates and fees, right? But what are some other things that a borrower should consider prior to choosing a lender outside of rates and fees? Like before they even get into rates and fees, what should they be looking at or considering?
Well, the top thing that I would say that you should be considering is the loan officer educating you? Are they giving you a whole breakdown of everything versus just shouting out a rate to you before you're even under contract to try and win your business? So providing you guidance, educating, options.
You brought up a good point of timing. I remember what the first lender I worked for, they told me when a borrower asks you what their rate is, to tell them a little bit below market. That way, when they go to the next lender, if they say market rate, they'll seem higher and the borrower will come back to you before the shopping's even started. How do you operate? Do you do that kind of tactic?
I do not do that kind of tactic. With transparency, we have integrity first on our sign for a reason. So being able to let them know that we all get our interest rates from the same place, but we can stack them differently. I learned that from someone very wise when I first started here.
Someone I know.
Yes, you do.
But so, it's funny because people, they automatically want to say, what's your rate? Well, the rate today doesn't matter. If they don't have a loan to lock today, the rate today does not matter.
But do they know that, Joe? And that's about educating them.
Right.
So it goes
That's
back to bringing up, I can give you the rate today, but are you under contract? That could change.
Right.
So,
and I understand if all lenders were honest, knowing what the rate was today and be able to compare that to other lenders might make sense. But the reality is lenders know that you can't lock a rate today, and they might say something that they can't deliver just to get you to think that you're the best one out there. And rates change on a daily, sometimes hourly basis. Even by lender, they change daily. And sometimes the lender is priced differently on different days. So this is why it's confusing. This is why we're doing this podcast. So, okay, outside of explaining things, what are some other things that a borrower should consider prior to choosing a lender or when choosing a lender?
well, really the local reputation. So if you talk to people and they have heard about the lender that you're using, asking them what their experience was or what they've heard is really another thing to consider.
Yeah, local. Why is being local important? That's kind of a loaded question, but why is being local important?
Well, local means you don't have to drive far to find them.
Right.
So if you want to find me, I'm right here at Morgan Financial.
Either thank you or if you did something wrong, they know where to find you, right?
Yes.
Now, we don't have many clients coming here looking for you because you did something wrong. So that's a good thing.
This is true.
What about, you said reputation. Obviously, reputation matters when you're putting in an offer with a pre-approval letter. One might hold more weight than another.
Yes, definitely.
Cool. So anything else that people should consider? Maybe what about having their team here or things like that?
Absolutely. So the loan officer themselves might be located here locally, but what about their team, meaning processors and underwriters? So, for us, I always say, well, I can walk right upstairs if I have a question and I need to ask something to our underwriters. They're used to me, knock, knock.
Yeah,
of course, I try to give them a note.
Do you? Okay. All right. Yeah. And, that means a lot because, our local underwriters, they know what a Patrick Space Force Base LES looks like.
Yes.
They know how to get a hold of, the big local employers in town to verify employment and things like that. They understand appraisals and, there's a big part of our area that's a barrier island, and understanding that you can go outside of a mile for comps on an appraisal is important local knowledge that it does matter who you work with. Well, what about once you find a lender who you believe will perform? I mean, we didn't even talk about timing, but can they close on time? That's important.
Oh, that very good point, Joe.
Time, well, that's why I'm here. But there's things like that. But once you find someone who you think can perform, they have a good local reputation. They have a local team that can get things done quickly, on time, as promised. What are some things, or how do you shop between lenders? Now let's pretend you found two of them. Now they both give you estimates. What should they do at this point? They get estimates from two local lenders who they believe will do a good job, or two lenders that they believe will do a good job. How do they differentiate, or what do they look for?
Well, it's really the fees in which the lender is charging, and you can locate them in the top portion, depending on what the estimates look like in the beginning phase. So a lot of fees that I've seen are originations, processing, underwriting, credit report, quality control check, flood certification, chair sitting fee. I've seen on one before.
Chair sitting fee.
I mean,
can I get paid for that? I'm sitting in a chair.
Yes, you can, Joe.
Thank you. Well, so fees, but what about the rate? Can you separate the two?
And the fees can often be baked into the rate that's being provided. So, what it would be wise to do is to go over what's the savings for the lower rate versus the cost to get it. So there could be discount points associated with the rate. And so all of those things matter.
So you have two lenders, same rate, same closing date, same loan amount. What would you do? What would you look at that point?
I would look at typically sections A and B of the estimates in order to differentiate between the two. And then if you're the client, asking yourself, well, which one answered my questions? Which one was readily available? Which one gave me insight behind things? Which one seems like they know what they're doing?
Right.
Those types of things.
So many people think it just comes down to rates and fees, but they don't know what they don't know. And sometimes loan officers like yourself will give options that they didn't even know they had. I want the lowest rate or the lowest fees, but they don't look at the whole picture. Do you have examples of that, or something you like that happened recently?
Oh, absolutely. My favorite thing to say, which I learned from somebody, was not all lenders are created equal. And so you could look at an equal apples to apples comparison, but then if that loan officer wasn't available to answer questions, if you're asking them and they're not truly guiding you through the questions, then, do you really want to work with someone like that?
Right. Well, let's talk about the fees piece, right? Sometimes people say, I don't want to pay points.
Yeah.
What do you do with that client? What do you tell them?
So most of the time I don't take it for face value. I'm not just going to say, well, this is the rate. It's, well, let's talk about that. I understand you don't want to pay points because points have a negative connotation. A lot of people hear things about it and they don't really know.
Right.
And so it's about going through the functions of math with them to talk about that savings versus the cost and the recoup period. Does it make financial sense for you? How long do you plan on living in the home? Not only that, how long do you plan on keeping the home and the mortgage? When are rates going down? When are you refinancing? All those things.
So it comes with a consultation to figure out what do they truly need, because sometimes people don't know exactly what they need. I mean, it's they don't do this every day. They might do it 5 times in a lifetime, where you do it a couple times a day, right?
Yes.
Several times a day. And so that education that you give them, I mean, if you go to McDonald's and you say, I want a cheeseburger and fries, you're going to get a cheeseburger and fries. But if mortgages are a little bit more complex, they're a little bit more long-term, and they have a little bit more financial implications. So when someone says, I want a 30-year fixed rate mortgage with no points, and you just give them what they want without looking at their entire picture, they might not get something that they truly need, right? So I guess you're saying education, just educate them, give them the options and let them make the decision.
Exactly. And that you get to that by asking a lot of questions up front.
It's cool. All right. So what are some, we see, even in this market, we see a lot of lenders out there that might not act the best way, right? So what are some red flags you've seen that borrowers should be aware of so they can avoid when they see this, run, Or what are some red flags? Maybe not run, but be very aware of and cautious of when you see.
So estimates, if you're talking to them and they're like, well, this is what, it's going to be with no fees. And then you look at their estimate and it reflects something totally different. If they're saying, okay, this is your rate, and then you receive the estimate and it shows that you're not locked in to what they're talking about. Well, guess what? If it shows not locked in, then that can change.
It's not locked in.
Yep.
Right. So you mentioned the fees. Like I've heard people say, we have no points on our loans and they have a ton of fees. Or
Yes.
we have no fees and they have a ton of points. It goes back to what you originally said. We get our money basically from the same place. It's just how we stack it, right?
Yes.
It's like how we structure that deal. And, some people like to hide their stuff. And I'd just rather tell them, this is what it cost you. Like you said before, this is what it cost you. Here's the benefit you get for that cost, and let them make the decision.
Yes, if they're just giving you over something and making you decipher and translate something, like you, to your point, you
Right.
do 5 times in a year and you're not exactly sure what it is. Well, do you really want to work with someone that either can't explain it to you or hasn't explained it to you?
Or just won't take the time with you.
Yes.
I mean, they might take for granted how big of a purchase. I mean, most people, like I said, only do it a couple times in a lifetime. And some loan officers take that for granted and don't fully explain things, which is crazy to me. You got to treat each customer like they've never done this before, unless they tell you otherwise, right? So we talk about rates and fees. We talk about the other things that are involved in shopping for a loan, like reputation, speed, where your team is, all these great things. What role does pre-approval? And we've heard that word tossed around a lot, but where does pre-approval come in and what role does it play in this process?
So, pre-approval really depends on what company that you work for in order for what a pre-approval means to them. So, don't take lightly if someone says you're pre-approved. Some questions you might ask is, so has your underwriter reviewed my documents in advance, or has this just been at your desk?
Right.
Because here at Morgan Financial, I don't know of many other companies that do this, but we provide your documents to underwriting in advance before you've gone under contract. So you don't have to worry about, once you receive a letter from Morgan Financial, whether or not, oh my gosh, is this going to fall apart? Well, not due to the client.
Right. Well, that's good. That's that power of being local also. That's the reputation as well. It's like, a lot of loan officers are the one issuing their own pre-approvals. Well, it hasn't gone to underwriting in most cases. Not all, right? But most cases here, all of our loans go to underwriting. If you get a secured approval letter, what we call a SAL, that loan's been underwritten.
Exactly.
And I think that will save them time and money.
Exactly. Well, and that, speaks volumes when we go back to reputation of knowing here locally that is what we do. So when a seller receives our letter, they're knowing what that means. And we're going to call them to tell them what it means, to let the listing agent know.
So having worked at other companies in the distant past, would you recommend that don't do that way? Would you recommend that borrowers find a lender that will have an underwriter pre-approve you up front?
Based on, my experience with that, absolutely. It's so important because we can miss things. It might not be due to them wanting to miss it or meaning to, but it has a second set of eyes on everything. A licensed underwriter looking at it is definitely beneficial.
Cool. Well, good. So it sounds like, just to recap real quick, find a lender that you work with that can explain things, that has a good reputation, that's local, that has a local team, that underwrites their pre-approvals, right? And then you mentioned shopping for a loan, rates and fees, don't separate them. What are your options there? And then finally, the red flags. Look, if someone is ghosting you, I don't know if you mentioned the ghosting thing, but
yeah, I didn't. The ghosting, a lender ghosting you, or there was something else. But
yeah, no worries. If they're ghosting you, run.
Yes.
Because if they're ghosting you before you even under contract, what's going to happen when you're under contract?
Yes.
Or if you can't get a hold of them, or if they're not easily acceptable to answer your questions or accessible to answer your question, that's a problem. So any final words on any of this shopping business?
I would say with regards to this shopping business, that the best thing that you can do for yourself is to shop lenders based on more than just interest rates, because they might tell you something up front that doesn't end up coming to fruition later on.
Yep.
So making sure that is at your forefront is working with somebody that you feel like you can trust.
Awesome. Well, thanks, Mary. I really appreciate your professionalism and your time here. So thanks again. And thank you for watching. Don't forget, if you found any value in this, please like it. We really appreciate likes. If you're not a subscriber, subscribe. Share it with friends, family, coworkers, whoever you think might benefit from the information. And we'll see you next time.